what are some things that you look for in a searcher or in a particular deal?
Yeah, I mean, I would break it out. So in my mind, I think there's kind of four kind of markets I look at in search, and we'll kind of talk through, and then we'll go into the deal. So there's traditional search fund. So kind of out of classic MBA schools raising a traditional search fund, $400,000, a little bit more. There is search fund accelerators, which are the same concept, but one pool of capital, coming from groups like Search Fund Accelerator, Next Gen Growth. I'd say there's self-funded search using an SBA loan. So these are kind of $3 to $7 million deals using SBA as primary debt. And it's another group of investors, because any investor that owns up to 20% of the economic interest puts a PG on it. So no one wants to do that. So it's a group of investors. And then I'd say there's independent sponsor deals, which are self-funded but large deals. So think 10 to 50 million of enterprise value, often roll-ups, and not using SBA, using conventional debt. So those are kind of the four groups I look at. To step back and say, what do you look for in the different groups? It really fits kind of depending on the group. So in traditional search, I think a lot of investors are looking for a few things, because you're betting on the person. So those they don't have a deal, so you can't evaluate the deal, right? And so you're looking for a couple different things. So one is just a really strong interest in search with realistic expectations of search. And so what does that look like? That means, hey, maybe they've interned at a search fund, maybe they've interned at a search fund to fund, maybe they worked at the ETA club, maybe they've talked to 50 searchers, just a real understanding of like what this is going to be like. Because as we know through this podcast, it's great to buy a business, but it's not all glamorous. There's up days and bad days. And sometimes it might be a little easier just working at Boston Consulting Group on the fancy name. And so you want to know folks that really want to do it. I think two, you want folks that have the kind of three basic skills I look for in businesses are like, can they find a deal sourcing? So do they know how to find a deal? Two, once they have a deal, do they know how to close a deal? That's kind of PE or closing deals. And then three, can they operate a business? Can they lead teams, manage people, manage a P&L? And so most search fund investors are looking for those three things. And sometimes you have a pair. And so one is the kind of consultant P&L person, one is the private equity banker deal sourcing. Or if it's just a solo searcher, understanding your gaps and how you're going to solve for those gaps. Maybe I'll pause there. Does that make sense on the kind of searcher side?
Yeah, absolutely. What I have actually found with searchers is what sometimes makes a searcher successful is not the same skill set as operating the business after the fact, right? And so you kind of have these skill sets that sort of translate, but a lot of times they're siloed and you're at different levels within your search. And so you kind of have to like, you're in the grind, you're looking at a lot of deals. It's a lot of technical analysis and understanding risk and understanding future growth. And then, fast forward a year or two down the road, you end up buying a company and you've got 10 employees or 20 employees or 50 employees, and you've got a fleet of whatever. All of a sudden, that's a completely different skill set than what you were doing before. You could put the deal together, but that doesn't necessarily mean you can operate the business. And so You're operating under all these different levels and you're putting on all these different hats at different times, but you kind of have to be like better than average at all of these things to make it work.
Yeah, and you have to have the ability to learn those skills, right? So I think that's a big part. Are you able to learn those skills quickly along the process? And then I would say on the kind of the self-funded and independent sponsor side, you're kind of removing the kind of can they find a deal because they have a deal, right? So you're kind of removing that from the equation. So at that point, you're really just looking, is it a good deal? And does it kind of, does it fit? Honestly, the checklist at the back of the Harvard Red Book on buying a business is still probably the best. Is it low customer concentration, high recurring, low CapEx, tailwinds to the industry? All those kind of basic fundamentals of good search businesses, I think, is how you look at the deal. And then you kind of look at, are they a good fit for that business? So, hey, I have me buying another software business, clearly it fits with my background, but hey, maybe if it's buying a niche manufacturing business in Mississippi, you might say, hey, I don't know, does this guy in DC, is he going to fit in Mississippi? Does he know anything about manufacturing? Can he lead a team of blue collar, high-end manufacturing skilled labor. So I think looking if the searcher fits for the business is kind of a second key point. And then third, trying to align on both terms and vision for the business. So what are we doing with this business together? Are you trying to build a big business and really grow it and invest for growth? Are you trying to hold this business forever and do it as kind of a cash cow and spit out dividends to investors every few years? But understanding what's the searcher's goal with the business and how do the terms align to that, and do they fit for the investor and the searcher?
Yeah, thanks for diving into that. I think there's so many moving pieces that some of these deals can make sense for certain investors or certain searchers, but sometimes you're kind of marrying up the same goals that investors will have with the same searchers and making sure that is all aligned.